In a dramatic turn of events, the cryptocurrency market has faced a significant sell-off, resulting in the loss of over $1 trillion in value within just a month. The downturn has been exacerbated by a mix of macroeconomic anxieties and influential voices within the financial community, including a stark warning from BlackRock CEO Larry Fink. With Bitcoin prices dipping below the $80,000 mark, the implications for investors and the broader market are profound. Fears of a potential crash have been fueled by escalating concerns about inflation and the U.S. economy's stability. Fink, addressing attendees at the CERAWeek conference, stated, "If we all are becoming a little more nationalistic, it's going to have elevated inflation." This sentiment aligns with observations from Goldman Sachs, which has raised the probability of a recession in the next year from 15% to 20%. Citing the economic risks associated with recent policy shifts under President Donald Trump, economists at Yardeni Research echoed these concerns, increasing their recession odds from 20% to 35%, attributing the volatility to a head-spinning barrage of executive orders, firings, and tariffs. As the Federal Reserve remains reluctant to cut interest rates with inflation still a concern, the market is on edge. Federal Reserve Chair Jerome Powell has indicated a cautious approach, emphasizing that the labor market remains robust despite inflationary pressures. The upcoming release of the Consumer Price Index (CPI) is anticipated to provide further insight into these inflationary trends, with expectations of a slight uptick in consumer prices. The crypto market's current turmoil can be traced to several interrelated factors. Chief among them is macroeconomic uncertainty, which has prompted many investors to withdraw from riskier assets like cryptocurrencies. Regulatory pressures are also mounting, with discussions of potential new regulations on crypto trading in both the US and Europe leading to increased unease among traders. Significant liquidations of long positions have only added to the downward momentum, exacerbating the decline in Bitcoin's value. Bitcoin, which reached an all-time high of nearly $74,000 in March 2024, has now experienced an over 8% drop, currently hovering around $80,000. The broader cryptocurrency market has similarly suffered, with major altcoins like Ethereum and Solana also witnessing substantial declines. The crypto market capitalization has shrunk to approximately $2.5 trillion, reflecting widespread fear among investors. Investor sentiment has shifted dramatically. The Crypto Fear and Greed Index has fallen from 72, indicating a state of greed, to 48, which signals a neutral stance. This shift has led to increased panic selling as traders seek to mitigate potential losses. Institutional investors, who played a crucial role in Bitcoin's previous bullish phase, are now also reconsidering their positions. Notably, MicroStrategy has faced significant losses due to the downturn, and BlackRock's Bitcoin ETF has seen outflows, indicating a decline in institutional confidence. Looking ahead, experts are divided on Bitcoin's potential recovery. Optimists argue that strong market fundamentals and continued interest from long-term holders could facilitate a rebound. Conversely, some analysts warn of further declines if regulatory challenges intensify or if macroeconomic conditions worsen. Should Bitcoin fail to maintain its current support level, it could test lower thresholds around $75,000 or even $70,000 in the weeks to come. As investors navigate this turbulent landscape, it is crucial to remain informed about ongoing regulatory developments and broader economic indicators. Diversification and a long-term perspective are advisable strategies to weather this volatility. While the current sell-off has rattled the cryptocurrency market, history shows that Bitcoin has demonstrated resilience in the face of adversity. Whether this represents a temporary correction or the onset of a prolonged bearish phase remains to be seen, but vigilance and adaptability will be key for those involved in the ever-evolving crypto space. In a dramatic turn of events, the cryptocurrency market has experienced a staggering sell-off, erasing over $1 trillion in value within a month as Bitcoin's price dipped below $80,000. This downturn has sparked significant concern among investors and market analysts, particularly as high-profile figures like Larry Fink, CEO of BlackRock, weigh in on the potential implications of this volatility.
Fink's recent remarks at the CERAWeek conference highlighted fears that inflation could resurge due to rising nationalism and inflationary trade policies under the current U.S. administration, which he suggested could thwart hopes for interest rate cuts through 2025. The backdrop of this sell-off is multifaceted, encompassing macroeconomic uncertainties, regulatory pressures, and a wave of profit-taking among institutional investors. Goldman Sachs has increased the probability of a U.S. recession from 15% to 20%, citing the economic risks posed by the policies of former President Trump. Concurrently, the Federal Reserve's Jerome Powell has indicated that the central bank is in no rush to reduce interest rates as the labor market remains robust and inflation continues to fluctuate. On the trading front, Bitcoin, which reached an all-time high of nearly $74,000 in March 2024, has seen a decline of over 8% from its recent peak. The current market capitalization for Bitcoin is approximately $1.56 trillion, putting it under significant pressure as other cryptocurrencies including Ethereum and Solana also face declines. Sean Dawson from Derive.xyz noted, "This market downturn is largely driven by broader economic concerns, including fears of a U.S. recession and persistent inflation. As traders adjust their strategies in response to this bearish sentiment, many are turning to downside hedging to mitigate risks. Investor sentiment remains a key driver of Bitcoin's price movements. Following a significant rally, many are cashing out, exacerbated by fears of impending regulatory changes in both the US and Europe. The Crypto Fear and Greed Index, a gauge of market sentiment, has dropped sharply, indicating a shift from greed to a more cautious stance among traders. Notably, institutional interest appears to be waning as platforms like BlackRock's Bitcoin ETF report outflows, highlighting a decline in confidence. In this turbulent environment, investors are left wondering whether Bitcoin can recover from its recent declines. Analysts are divided. Some believe that the underlying fundamentals remain strong and that demand from long-term holders may support a rebound, while others caution that regulatory pressures and adverse economic conditions could lead to further declines. Key resistance levels to watch include the $80,000 support. Should Bitcoin fail to hold this threshold, it might test lower levels at $75,000 or even $70,000 in the coming weeks. As the dust settles on this recent market turbulence, it's clear that the path forward for Bitcoin and the broader cryptocurrency market is fraught with uncertainty. Investors are advised to stay informed about macroeconomic conditions and regulatory developments, diversify their portfolios to mitigate risk, and adopt a long-term investment perspective. The current moment in the crypto landscape serves as a reminder of the volatility inherent in digital assets. But history suggests that with caution and strategic planning, opportunities may still arise amid the chaos. In an era marked by economic uncertainty and fluctuating market dynamics, the cryptocurrency landscape is facing its own set of challenges. Recent analyses reveal troubling trends within the sector, highlighting how the rich and the criminal are increasingly capitalizing on a system that appears to be unraveling under its own weight. Just as the Center for Economic and Policy Research released insights on the widening wealth gap exacerbated by crypto dynamics, the market itself is reacting to a volatile political landscape, particularly under the Trump administration. Following Donald Trump's return to the political forefront, the cryptocurrency market initially witnessed a surge in optimism. His administration's pro-crypto rhetoric seemed to promise a more favorable regulatory environment, which resulted in a spike in digital asset prices, including Bitcoin, which reached an all-time high of over $109,000 on the day of his inauguration. However, as recent data indicates, this optimism has begun to dissipate, with Bitcoin plummeting to below $78,000, a stark 28% drop from its peak. The current downturn in the crypto market can be attributed to growing concerns about the broader U.S. economy alongside a series of unpredictable trade policies under Trump. Analysts are pointing to the correlation between the recent volatility in cryptocurrencies and a shift in investor sentiment, particularly as the equity markets experience what some are calling a tantrum.
Jeff Dorman, Chief Investment Officer at crypto asset manager Arca, noted while the early parts of the crypto sell-off in January and early February had nothing to do with the global macro picture, the last 2 weeks have 100% been driven by the equity market tantrum.
Industry insiders are feeling the pressure,
with many day traders caught in the crossfire of a sweeping sell-off. Leveraged exchange-traded funds ETFs that sought enhanced returns on crypto investments have been particularly hard hit, with some funds experiencing losses exceeding 30% in a single day. Analysts have pointed out that this downturn reflects not only operational issues but a significant reset in market expectations regarding Trump's policies. The market reaction reflects a reset in expectations, said Haider Rafiq, Chief Marketing Officer for crypto exchange OKX, indicating a disconnect between rhetoric and tangible support for the crypto industry. Despite the growing skepticism, some in the sector remain optimistic, asserting that the long-term outlook for cryptocurrencies is still favorable.
J.P. Richardson, CEO of cryptocurrency wallet platform Exodus, expressed a proactive stance, stating,
"Those of us that are in the industry remain hyper-bullish.
I'm trying to buy as much Bitcoin as I can right now."
Yet the industry does face a significant challenge in regaining investor confidence, particularly as the realities of a potential recession loom large. Economists have heightened their warnings, with models from J.P. Morgan and Goldman Sachs indicating an increasing likelihood of an economic downturn, which could further dampen speculative investments in high-risk assets like cryptocurrencies. As the market grapples with these pressures, the cryptosphere continues to reflect a broader narrative about wealth and power dynamics. The rich and the criminal are not only surviving but thriving in this tumultuous environment as the regulatory frameworks struggle to keep pace. The outlook for cryptocurrencies remains uncertain, as both market conditions and investor sentiment will play crucial roles in shaping the future of this burgeoning sector.
Looking ahead, the cryptocurrency industry faces a pivotal moment.
The next steps taken by the Trump administration, particularly regarding regulatory clarity and support for digital assets, will be instrumental in determining whether the market can stabilize or if it will continue to falter. As industry participants and investors navigate this intricate landscape, the intersection of technology, finance, and policy will undoubtedly shape the trajectory of cryptocurrencies in the months to come. In a dramatic turn of events for the cryptocurrency market, Bitcoin's price has plunged below $80,000, contributing to a staggering $1 trillion loss in value across digital assets within
just a month. This downward spiral has been closely linked to broader economic concerns, particularly mounting fears of a potential recession and persistent inflation.
As these worries intensify,
BlackRock CEO Larry Fink has issued a stark warning regarding the implications of these trends for both the cryptocurrency market and the global economy.
During a recent address at the CERAWeek conference, Fink highlighted the potential resurgence of inflation in 2025, a sentiment echoed by economists at Goldman Sachs, who have increased their recession probability forecasts from 15% to 20%. Fink stated, "If we all are becoming a little more nationalistic, and I'm not saying that's a bad thing, it does resonate with me, that it's going to have elevated inflation." This warning points to the challenges ahead, particularly as the U.S. grapples with the economic policies of the Trump administration, which many experts deem as a significant risk factor. As the crypto market reels from this volatility, notable figures like Elon Musk have also weighed in, issuing warnings about the sustainability of current price levels. The Federal Reserve's Chair Jerome Powell has indicated that the central bank is in no rush to cut interest rates given a still strong labor market and inflationary pressures that are unlikely to abate quickly. The anticipated Consumer Price Index (CPI) data is expected to show an uptick in consumer prices, adding to the uncertainty and fears of stagflation, a scenario of economic stagnation coupled with rising prices. Market analysts are keenly observing the situation, with Sean Dawson, head of research at decentralized options trading platform Derive.xyz, noting that the current downturn is largely driven by economic anxieties.
This market downturn is largely driven by broader economic concerns, including fears of a U.S. recession and persistent inflation. He commented,
Dawson further added that traders are increasingly adopting downside hedging strategies as volatility continues to surge in both traditional and crypto markets. The sharp decline in Bitcoin's value has not only impacted the leading cryptocurrency but has also sent ripples through the entire digital asset ecosystem, leading to significant shifts in trading behavior.
Investors are now faced with the critical question: could this be an opportune moment to buy the dip?
While some experts advocate for caution in light of the volatile environment, others believe that the potential for recovery remains, particularly as the crypto market has historically demonstrated resilience in the face of adversity. Looking ahead, the future of cryptocurrencies like Bitcoin and Ethereum remains uncertain.
As economic conditions evolve,
so too will the strategies employed by investors and traders.
The coming weeks will be crucial in determining whether this downturn is a temporary setback or a sign of a deeper structural issue within the cryptocurrency market. As always, market participants must tread carefully, balancing the allure of potential gains against the backdrop of a fluctuating economic landscape. In the ever-evolving landscape of cryptocurrency, the rivalry between Ethereum and Solana has captured the attention of investors and analysts alike. As of March 2025, Solana has shown remarkable growth with a staggering 1,322% increase over the past 2 years compared to Ethereum's relatively modest 81%. This performance raises a pivotal question for investors: is Solana becoming the preferred choice over Ethereum, traditionally viewed as the industry leader since its inception in 2015? Ethereum has long been the titan of the blockchain realm,
boasting a market capitalization of approximately $265 billion and a track record that has made many early investors wealthy. The rise of Ethereum from a mere $2 in early 2016 to over $2,000 by early 2025 exemplifies its strong investment potential.
However, recent trends suggest a shift in momentum. Following the end of the crypto winter in 2022, Solana's user growth and transaction activity have surged, indicating a robust adoption rate that could challenge Ethereum's dominance. Solana is now growing faster than Ethereum, states Dominic Basalto, an analyst at The Motley Fool. With its technical advantages, faster transaction speeds, lower costs, and enhanced usability, Solana has become a formidable competitor in areas ranging from decentralized finance DeFi to artificial intelligence. These factors have begun to attract significant attention from institutional investors, including Cathie Wood of ARK Invest, who has hinted that Solana might eventually surpass Ethereum. Despite its impressive growth, Solana's rapid rise has not been without risks. Much of its recent success can be attributed to the speculative nature of meme coins, a trend that has drawn in many new users. This boom, however, has raised concerns about the sustainability of Solana's performance as the market grapples with the potential effects of a meme coin bubble burst. Indeed, following a recent downturn, Solana's price has dropped by 50% from an all-time high of $294, highlighting the volatility inherent in such speculative investments. On the other hand, Ethereum's current struggles, down 35% in 2025 alone, raise questions about its ability to maintain its position in the crypto hierarchy. As market conditions evolve, some analysts suggest that the crypto industry may be witnessing a changing of the guard, where upstart challengers like Solana could outpace established players. The market context is further complicated by macroeconomic factors. With rising inflation fears and potential economic downturns looming, investor sentiment across all asset classes, including cryptocurrencies, remains cautious. BlackRock CEO Larry Fink recently cautioned that inflation could rise due to increasing nationalism and economic policies, which could hamper expectations for interest rate cuts by the Federal Reserve. In this uncertain environment, analysts are divided on the future trajectory of not just Solana and Ethereum but the entire crypto market. Some believe that the current downturn may represent a classic bear trap where temporary declines could precede significant recoveries. Others express concern that the sustained bearish sentiment could lead to more significant sell-offs in the coming weeks. As cryptocurrency markets continue to grapple with both internal and external pressures, The competition between Ethereum and Solana is emblematic of a broader shift within the crypto space.
While Ethereum has built a legacy over the past decade, Solana's rapid growth and technological advantages cannot be ignored. Investors must weigh the potential for high rewards against the inherent risks associated with both assets. As we move forward, the question remains whether Ethereum can reclaim its former glory or if Solana will solidify its place as the new leader in blockchain technology. The next few months may prove crucial in determining the future landscape of cryptocurrency, making it an exciting time for investors and enthusiasts alike.